in that opinion. And in doing so, we're probably going to have to raise rates. And I think we've finally come to a consensus, at least for the short term, where what the Fed is saying now matches what interest rate futures are saying, which is that we'll probably get one, perhaps two more hikes this year. And I think everyone's kind of okay with it now. Because at first the market rocketed up and then it fell like immediately. If you look at the chart from yesterday, the J Powell started talking, the market went up like 1.5%, then fell 1.5% plus, down in the negative territory, and then slowly marched up towards the end of the day. So we ended up positive, up about 1.3%, I believe, on the S&P. But it was just a whipsaw right there in the middle of the day. And it seemed like the market reacted positively, then not so positively, but we ultimately ended up right back where we were after he spoke. So I think everybody's on the same page now, which I think is important. There's not a lot of the market says one thing, Jay Powell says another. Right now, at least for the short term, we're right on the same track, which is important.
Yesterday, we talked about, is he going to talk about wage growth and that coming down, or is he going to talk about the jobs number? And I think he gave you the sign when he talked about the jobs number. He didn't talk about the wage growth coming down in the report. He talked about the jobs number being strong. And he said that we're not seeing disinflation in labor intensive services yet. And that's going to take some time. So I would say relatively hawkish from Powell, but really he said about the same thing that he said on Wednesday. He just said it in light of a very strong jobs report.
Yeah. I thought it was interesting. There were some really good pieces of that interview. It also got a little off the rails in the middle. The guy who was interviewing definitely thought he was a comedian. Though he also asked point blank, how much do you make? Which I thought was a wild question. I don't know if it's public record what the Fed chair makes. It must be, right? But he makes $190,000 a year. He asked him if he thought that was a fair wage. He asked him again, which is such a weird recurring theme about whether or not he thinks that riding his bike is dangerous, which I don't know why everyone's so concerned about the danger of Jay Powell riding his bike around Washington, D.C., but it comes up repeatedly in these interviews, which is so weird.
Takeaway for me is that the Fed is now firmly in the data dependent camp, which is a shift from 3 or 4 months ago when they were intent on raising rates almost regardless of the data.
Yeah.
So I think that's a big shift. Call it a pivot, call it a pause, call it a whatever you want.
A non-pivot.
It has changed, but it doesn't necessarily mean the Fed's going to be cutting immediately. I would say inflation does appear to be coming down, but January is weird though, because the year-over-year comparisons are going to look very favorable in terms of economic growth because Omicron really shut down a lot of things last year. I mean, if you think about January in 2022, COVID was going nuts. And I think people forget how bad COVID was in January last year and people who were out and the wages as a result. So moving on, State of the Union was last night, kicked off at 9 p.m. I'm not sure what time it finished. I pivoted and went to the transcript about 20 minutes into it. There are a few consequential proposals, and there are a few proposals in it that really won't have any water because of it'll need to have to go through Congress, which is probably DOA. But a few of the proposals, capping credit card late fees at $8. Down from 30. I'm not sure exactly how they can do that, maybe through the CFPB, but it seems like price controls to that regard would be a little bit of an overreach. I don't know how they do that. Insulin at $35. I was talking to, because I wanted to have a little bit of understanding of this. And right now the cap that's in place is for a certain type of insulin on certain types of plans, and it was already at $20 anyway. So it really didn't do anything. Although they're talking like it did. And then one thing they said was no resort fees at hotels. So maybe let's just camp out on that really quickly, Tom. Trying to get away from what the President Biden talked about as junk fees. So whether it's credit card late fees, insulin, resort fees, he's trying to put a cap on that.
Yeah, I mean, additionally, you talked to briefly, I think, was mentioning the Ticketmaster thing. Knowing what you're going to pay up front. I mean, that's been the thorn in everyone's side since the history of concert tickets, I think. And it's been particularly visible lately with the Taylor Swift thing. And I mean, I don't know how much they can really do on that. I think there are a lot of places where you could probably put some legislation in place and save people a lot of money. The resort fee stuff, especially. I mean, even on like the college tuition stuff, when you look at your breakdown of what you're paying for, there's all kinds of like athletic fees and all these kinds of different things that got built in. I remember thinking that when I was paying tuition, like, why am I paying, like a facilities fee of $1,200 per semester? Like, I don't even know what that's for. I think that could be beneficial, but the credit card thing is interesting. If you don't pay your credit card bills, there should be a penalty. I think people should be incentivized to pay them and not have credit card debt, in my opinion. And I think that's going to become very clear if rates continue to go up, when, your average credit card interest rate is going to be 20+%, if not closer to 30 for some of the lower end credits. I think we need to be incentivizing people to pay on time and be responsible about that, rather than de-incentivizing them by making the penalties even less. But maybe it'll help people get out from underneath it. It's a double-edged sword. So I think there's a lot that can be done there. The question is how effective they're going to be. I mean, I don't know. Is that really the top of mind? Resort fees? Resort fees are for people who go on vacation, and the boys like to work here. So
he also said all federal infrastructure projects should be using American construction materials. That'll be very difficult or expensive to enforce and audit, I would presume. And he was also talking about taxes, 4 times increasing the stock buyback tax from 1% to 4%, which some people said is a 400% increase. Guys, math is that's a 300% increase, 4 times. 300%. So there was a couple websites that got that wrong, which just bugged me. Billionaire tax they were talking about. So looking for some higher taxes. Again, a lot of the stuff on the tax thing, you'll need congressional approval to get that through. I think that's probably difficult to do. On the federal infrastructure projects using American construction materials, that's easier for the executive branch to do, but how do they enforce it, I guess, is the question.
Yeah. And also the question is, what constitutes a construction material? Because, I mean, hypothetically, if we're buying tons of Venezuelan oil, does that count as a construction material? Or is that, I mean, because it's going into the trucks that build it, the asphalt that's laid, there's probably going to be
getting refined into materials like that.
Yeah. So the question is like, does that count, if it doesn't come out of the ground here? So I'd be interested to see how that turns out. And I mean, it could cause more expensive construction, which, is neither here nor there. The question is, I mean, he's on the right track, right? We've gotten in the situation with the supply chain where we don't create a lot of things in the U.S. We don't buy a lot of U.S. goods to do basic things. I think that's the right way to move it. The question is how effective we're going to really be at pushing that forward.
The AI wars. Excuse me. So before we get to that, though, final wrap on the State of the Union. How do you think it went? What are the political implications? B, any market implications?
I think in my mind, it actually went pretty well. I thought Biden, especially on the front end, was more articulate than I think people thought. He was more energetic than people thought. I mean, it was pretty rah-rah at the beginning, which, I mean, everybody can get on board with. This is still the greatest country on the face of the earth, and, we need to keep it that way, and we need to work together. I mean, that was a lot of the beginning message. I think it fell apart a little bit towards the end. He got a little mumbly. They got into the weird, heated back and forth between Marjorie Taylor Greene and, all that stuff, which I thought was just messy and a bad look for everybody involved, but probably more so for the Republicans. I mean, that's going to be all over the news that the Republicans couldn't be quiet and they couldn't stop yelling at the president while he was giving a speech, which is disrespectful. I mean, I don't care really which side you're on. I don't think that's a good move necessarily. It's a bad look. And I think it plays into the fact that we've had a lot of momentum. Things are looking a lot better in the last 6 months. Biden's really done a better job in the second half of this year than the first half. And I think it shows, and he's in a bit of a power position and they're putting themselves on the back foot that way.
It's kind of the same thing as we're talking about Powell's. How much did Powell do to get inflation starting to come down over the last 6 months? How much did Biden do to get Russia a little bit better, to get inflation coming down, to get the jobs numbers solid, to get COVID kind of down? How do you partition credit? And at the end of the day, you kind of just got to hold up your hand and said, that person is in charge. I'm going to blame that person when things go badly. Got to give them credit when things go right.
Yeah, I mean that's the name of the game. It doesn't, everybody gets blamed for all kinds of different things when you're the president. That's just how it rolls. But when things go well, you got to be able to capitalize on that. And I think that they did that effectively last night.
And hopefully this elevates the Republican Party too, because you know, it clearly there's a higher bar that's required now in order for the Republicans to look attractive to voters.
Yeah.
Versus where it was a year ago.
Yeah.
All right, shifting gears to the artificial intelligence wars. Bing and Microsoft really coming out strongly with this GPT. You may have seen some articles on this, basically using artificial intelligence research, which I always thought was the case, but Microsoft's trying to take it to a new level. Right now, Google has, call it 90%, 88% market share in search. Bing has about 8% market share. And I think this could really improve Bing's standing. And I expect it would probably be a bigger needle mover for Google than it would be for Bing, for Microsoft overall, because Microsoft has a number of businesses and they're just ramping this up. But it could start to result in a bit of a crack in the edifice for Google. So Tom, tell me what your thoughts are. Again, it's very early days, and there have been mixed reviews about the efficacy of this AI, but it's definitely a shot across the bow from Microsoft.
I think it's going to be something that is talked about a lot that doesn't really come to fruition for a long time. I think it's going to be like 5G. I think it's going to be like Bitcoin. I think it's going to be metaverse. I think it's going to be like rare earth metals back in like 2013, where it's like, man, you got to get in this company. They're doing something crazy. But we were kind of joking before the call that there was a time where Microsoft rolled out an item called the Zune that was supposed to absolutely destroy the iPod. It was going to have Wi-Fi and a video screen. It was going to be, this awesome, like you could transfer your songs wirelessly to it. And it was an absolute flop, and it stunk out loud. And for a short period of time, everyone's like, man, Microsoft is about to destroy Apple. Apple's going to crumble and go away because they're going to take over the iPod space. So I would be hesitant to say that any one of these is a clear winner, or that there's any real clear evidence that this is going in any one particular direction. But I think there's going to be a lot of days where companies are up 5% because they've got some new form of AI that somebody saw and thought was cool. Small companies, big companies. I mean, I remember when Wayfair started accepting Bitcoin and it was up like 34% a day or something. And it's like, I mean, it doesn't really do anything. But I think that's the environment we're about to enter into with this ChatGPT AI stuff.
I think what we've seen over time is technology is going to progress. Over the next 10 to 20 years, yes, we will have more conversational artificial intelligence. I'm very confident that we'll have more computing power. And you look back 10 years from now to where we are today, and you look back and say, man, that's a very primitive technology. And look how far we've come. And I'm very convicted in that. And this is another step to going toward that. Having said that, you have to get 10 years out. I don't think these things change overnight. And I think that's ultimately what will happen with this, but it's a good step in the right direction for Microsoft. And I do think that there's this thing called the Lindy effect. Anyone who's read Nassim Taleb knows about that. And basically it is, if a company has been around for a long time, it's likely to continue to be around for a long time. If a company has been around for a short period of time, you don't have much data to go on that'll say it'll be around for a long period of time. Google's been around, a very successful company, 25 years or so. Great company, but it's only been around for 25 years.
Yeah.
And, people, so I think that's something to consider as you go forward. Chipotle, weak earnings from them. Right now, all the comps are based on pricing. The quarter, according to the CFO, the quarter said, frankly, we started the quarter soft and we ended the quarter soft. They did pick up in January, but that's because of the Omicron comps. I think if there are a few takeaways, what I would say is this: people, and especially lower income people, are moving away from Chipotle, and especially delivery. Delivery was down 15% in the quarter. Chipotle comps are going to be pressured over the course of the year. Pricing is going to go from 13% to 0%. Already in Q1, we're seeing pricing go from 13% to high single digits. it'll go to mid-single digits, and then it'll go to 0 over the course of the year. They do have some traffic weakness right now, but they say that that's partially offset by in-store growth. So people switching from delivery to in-store. Chipotle is going to have to manage this adeptly. They're definitely seeing some mix shift downward. You're seeing higher income people go to Chipotle, but then you're seeing lower income people go away from Chipotle to save some money. Interestingly, though, they say, look, we really have not seen a meaningful resistance to our pricing, especially as it relates to our in-store experience. Obviously, the delivery channel was down, but that's a premium product. We continue to see the higher income consumer, the individual that turns over $100,000, coming more often. And then he basically goes on to say, we would have lost the lower income consumer anyway, even if we had lower pricing, which I don't really buy. But because if you're saying the lower income consumer is leaving because of price, because they can't afford it, then I would guess that lower prices would help get lower income consumers into Chipotle. But that's just my opinion.
Yeah, I was surprised to see results here, but I mean, it does make sense. I mean, if you go in there, you're looking to spend $15 probably per person, and is it really worth the experience? I think a lot of people are trading off now. I'd be interested to see how how McDonald's does. Maybe not so much last quarter, but this upcoming quarter, Q1 of 2024.
Well, and McDonald's is beginning to take some share. I mean, you're seeing that.
Yeah, I'd just be real interested to see like what one full quarter of this looks like. Where does the money end up? Like when we go through earnings season next quarter, where was the fast food money? And that's where I'd be interested to see.
People. Maybe I'm just getting old, but I can remember when Chipotle was part of McDonald's.
Yeah, that's true. Yeah, it used to be a McDonald's.
McDonald's started it.
Yeah.
So interesting. But on that note, read the Wikipedia on Chipotle, and we'll see you tomorrow.